Good morning, everyone. You are listening a live daily market outlook from Windsor Brokers for Wednesday, 25th of July, 2012. At the beginning of our session, we are just in the middle of a strong market move. We are still trying to figure out what's going on. Usually, the European opening triggers some movements, and basically most of the instruments now moved from the past sessions rather neutral and sideways mode, moving most of the instruments moving in the rather narrow range. The euro got boosted in the early hours of European session, moving above 121 handle. However, a more negative outlook still seen, and the downside favored as this bounce is so far seen as corrective, with the initial resistance still intact at 121.43. and more significant 122.00. That what we mentioned in our written analysis published this morning, basically only regain of 122 would provide some near-term relief for the single currency. Along with euro, the sterling is moving higher, regaining again levels above 155. While dollar Swiss dips towards initial support at 99.00 after hitting a fresh high at 99.17 late hours of yesterday's session. As said, the pressure still remains towards the downside, with the single currency and the crude oil being pressed by yesterday's releases of Eurozone private sector that shrunk for a sixth month in a row in July, as manufacturing output also nosedived, and notably in the more core countries such as Germany and France. And this is adding to the likelihood that the bloc may slump back into recession, as yesterday's business surveys showed. Also, additional pressure on the prices was further evidence that the economy of the world's biggest economy, United States, was slowing, as data showed yesterday that U.S. manufacturing activity in July expanded at its slowest pace since late 2010. Also, Spain, as a hot point of a Eurozone crisis, paid the second highest yield in the short-term debt since the birth of the single currency on yesterday's auction, and the EU officials said Greece has little hope of meeting the terms of its bailout, casting a fresh doubt on its future in the Eurozone. Spain's increasingly desperate struggle to put its finances right has seen its borrowing costs soar to levels that are not manageable indefinitely, reflecting a growing belief that it will need a sovereign bailout the Eurozone can barely afford. It now has become the recent focus for investors, but Greece, where the sovereign debt crisis began, remains in focus. If Athens were to default or exit the Eurozone, the knock-on effect could push Spain and even Italy over the edge, and these are actually the main fears that are currently pressing. However, this moment the euro is still shooting higher. Also important to mention that according to the rumors from this morning, the traders on dollar yen remain on the high alert on possible intervention, with the focus on 78.00 and the number of stops mounting from 77.90 and a large number of stops seen at 77.60 level. A brief look to today's calendar before we move to the markets, as the action is still on. For today, I had already released from Australia. A leading index came at 0.4%, much better than previous, minus 1.4%, while Australian quarterly for second quarter inflation showed 0.5% compared to 0.6 forecast, higher than 0.1% of the previous release. Important releases are coming from Germany and the UK. The German IFO business climate for July is due at 8 o'clock GMT and is expected to show slowdown. Today's consensus is 104.7 compared to 105.3 of release of June, adding to the yesterday's PMI releases that came in quite a negative tone. UK GDP for a second quarter is forecasted again a negative -0.2%, slightly more optimistic than the previous release of first quarter at -0.3%, with the obviously showing that the UK economy is still still fragile and still more turned towards the downside and possibly entering a new recession, such as fears are mounting about Eurozone sliding back into recession. Industrial orders expectations from UK due at 10 o'clock expected to further slow to -12% compared to -11% of release of May, and the new home sales from US are due at 1400 GMT. 372,000 units is forecasted for today, slightly better than the May's release of 269,000. And finally, the crude oil inventories from US due at 1430 GMT are expected no change following a couple of weeks draw in the US crude stocks, with the latest one last week's release showing 800,000 barrels draw. And now we're going to move to the markets and see the latest movements, as the quite big activities are seen in the early hours of European session. We start with the euro. As shown on the 4-hour chart, clearly the downtrend is still intact. Its latest downleg from 126.91 end of June peak, as posted yesterday in late hours of US session, a marginally fresh low at 120.42, keeping focus on the downside and our main short-term target and a very important psychological support at 120.00 still in focus. As beginning of the week started with the gap lower, and this gap hasn't been filled so far. Not much to be seen in the current action, as long as 121.43 the high of last Monday, and the 121.55 closing price of the last week, again of which would be a confirmation of filling the beginning of the week's gap lower, might bring some more positive tone in the current action. Basically, this move was signaled by hourly MACD bullish divergence, as shown on the chart. This has also been mentioned in our morning written report, that it's possibility for some corrective action with the regain of minimum 121.43.55 seen as the first step to trigger some stronger correction, with the 121.80 and the more significant 122.00 level seen as a trigger for a stronger action towards the upside and stronger retracement of the latest down move. 122 and 122.15, the 61.8% retracement, regain of which would ease the current bear pressure and allow for some stronger recovery. A key barrier on the upside is still stands at 123.20 zone. That also marks approximately slightly more than 38.2% retracement of the larger down move from 126.91 to 120.42, the latest low seen so far, with the quite negative tone still seen on the 4-hour chart, not promising much as long as previously mentioned levels stay intact. Just to resume that more pressure and more focus is seen towards the downside, as the single currency continues to slide lower from its peak of the year at 2012, posted at in February at 134.85, and since then it dipped significantly, 120.42, heading towards 120.00, and the other very significant support at 118.75, low of 2010, posted in June 2010. That comes slowly in the focus as we are approaching to our first and initial support at 120.00. Sterling also reached levels close to important 154 zone, with the near-term price action still seen in the sideways mode, entrenched between 154.85 and the 155.50 range in past 2 days from the Monday's beginning, as descending 55 days exponential moving average so far limits the upside, with current attempt higher still not seeing the clear break. I would say still more focusing towards the downside, despite the hourly studies are now, indicators are pointing higher, and the fresh momentum seen on the latest move higher, break above minimum 155.50 that marks the range top, and 155.80, 38.2% Fibonacci retracement, along with the 156.00 as psychological barrier, would provide near-term relief and possibly allow for a stronger correction. For our chart, studies are firmly in the negative territory and quite extended, with immediate barrier seen at 155.50, where is descending 20 days exponential moving average, with the crossover of 20 and 55 days moving averages seen as additional pressure, with more focus seen on the downside. Immediate risk would be seen on loss of 155, 154.85 current near-term base. That will allow for further slide and open 154.60. That's his 6th of July low. 154.20 that marks the ascending bull trend line drawn of 152.67 yearly low through 153.92 low of 12th of July, currently standing at 154.30, ahead of a very significant 154 zone low of 12th of July, also low of 8th of June 2012, and basically break of this level would then focus fully to the downside, as pair still remains in the medium-term range defined by 154 on the downside and 157.50 on the upside, where 200 days moving average keeps the upside protected so far. Immediate resistance is seen as 20 days daily moving average, currently at 155.77. In case of break of our initial barrier at 155.50. However, as mentioned at the beginning, regain of minimum 156 level would provide the near-term relief and see potential for a stronger recovery, but basically the gain of 157 level is to ease the bear pressure and then focus higher for possible retest of key barrier on the upside at 157 40-50 zone and 157.76 peak of 20th of June 2012. Also on the larger picture, we have another very significant support, long-term bull trend line drawn of 2009 low at 135.01 through 142.30 low of 2010, currently standing at 153.70. That will be seen on a break below 154 support. As mentioned at the beginning, the risk is back on the possible intervention of Japanese central bank as the pair continues to slide. However, the near-term mode is seen moving in the rather sideways and neutral mode, with the 78 as initial support so far holding the downside, but pair being entrenched within a narrow range, with the 55 days moving average at 78.25, limiting the upside so far. Negative tone dominates on the lower time frames and still sees the downside more favored, as descending moving averages and the studies in the indicators, in the negative territory still keep focus at 78.00, 77.93. That will open way for a possible test of our key short-term support, 77.65 low of 1st of June. Since the pair failed at 80.61 at the end of June, and since then is in steady slide after losing the 200 days moving average at 79.00. This was also low. This was also the floor of the range, heading now lower. Set 78.00 and 77.65 remain in near-term focus, but risk of possible intervention is still high. The euros peak was the euros current rally was attributed to ECB's member Novotny, who commented, who made some comments, and there are arguments in favor of giving a euro bailout fund banking license. That was these are the headlines that I just saw. We're going to come back to this later on. Let's just continue our daily outlook. The Swiss franc dipped, the dollar Swiss dipped lower of its recent peak, 99.70, posted last night, hitting levels so far at 99.08, approaching actually the immediate support at 99 zone, whereas the higher platform at 98.87 posted on last Monday. A more negative tone now seen on the hourly studies as all indicators turned towards the downside. An immediate risk is seen on the retest of 99 support, break of which might delay the immediate bulls in favor of a stronger corrective action. However, overall outlook is still quite bullish and not much to be expected as long as 97.45, the next higher platform and a very significant support, stays intact. I would say ideal reversal should be seen at around the 98.70-80 zone that marks the previous peak, and approximately 38.2% of the latest up leg from 97.45 to 99.70. Only break here would allow for some stronger correction. On the upside, the parity level remains in focus as initial target ahead of 10046. That is 200 days moving average of the larger down move from 117.30 to 70.67, peak of 2010, and the low of 2011, also a record low of dollar Swiss. We're going to take a quick look at gold also, that is still maintaining a negative tone despite some action seen from yesterday's low at 1563, regaining levels at 1590, basically approaching our initial barrier at 1600, as the hourly studies now improved and pointing a higher seeing potential for possible attack at 1600. That also marks 61.8% retracement of the latest down leg from 1624 down to 1554. As mentioned in previous sessions, and not much happened in past a couple of days in the movements of gold. That is still in sideways, more aligned towards the downside mode, as long as initial barrier at 1600 stays intact. On the downside, the range support stands at 1565 zone approximately, and break lower would risk further extension towards 1554, 1548, and critical support well known at 1530-20 zone. Only break above 1600 would provide temporary relief for possible extension towards 1624, 1633, and 1640, our next upside targets. Daily studies are still rather negative, in negative to neutral mode, with the current attempt above 55 days moving average still not showing the clear break, with the clearance of 1600 required to confirm, and the open 1610 descending 90 days simple moving average as shown on the daily chart. The crude oil September contract is still in the sideways mode, with the range defined on the downside by 87.43, on the upside at 89.05. Basically, the pair fails to break initial barrier, also previous high at 89.00, where the 55 days moving average now moving sideways on the 4-hour chart limits the upside and descending 20 days exponential moving average currently at 89.02, moving lower for possible crossover that will put additional pressure on the oil price. as studies on the 4-hour chart are losing traction and already slid below the midlines. More focus is seen towards the downside with the hourly ones currently in the rather neutral mode, but still slightly aligned towards the downside. A break of initial barrier at 89.00 and 90.00, I would say, would provide relief and possibly turn near-term focus higher. Until then, in case of further upside rejections under 89 as initial barrier, more risk would be seen towards the downside and possible further retracement of the up leg from 77.27 to 93.22 is seen. Immediate support comes at 87.13, Fibonacci 38.2%, and 87.00 is around figure support ahead of next static levels at 86.46, previous range top, and 86.00 is around figure support. More risk would be seen on the loss of 83.64, higher platform of beginning of July, also close to 61.8% retracement. That would question the short-term bulls of 77.27 and possibly open way for a further retracement of the 77.27 and 93.22 ascent. As mentioned previously, a regain of 89.00 and 90.00 is required to improve the near-term structure and turn a near-term focus higher again. That was all for today. We are entering now the questions and answers session. Please, if you have any question, you can submit them now. We have a question for dollar Canada. As the dollar came under pressure in the early hours of European session, the dollar Canadian pulls down from its recent high at 102.30 posted in the early hours of this morning as a part of the rally from 100.64 low of last Thursday that peaked at 102.30 so far. Immediate focus on the downside comes as the pair loses initial support at 102. Immediate focus comes at and currently attempting below 55 days exponential moving average at 101.84, 101.67, the 38.2% retracement, and a static support low of yesterday at 101.56. The outlook still, the studies are still positive, but current move higher is weakening the hourly structure, while 4-hour ones look a bit toppish at this point and quite extended. That might be trigger for some stronger corrective action, as potential is basically seen as our indicators started to point lower now and being quite extended for possible test of 101.56, a low of yesterday's low. Basically, it's better seen on the hourly chart. 101.67, 101.56 seen as next downside targets, and basically a reversal at or above these levels would be seen as ideal end of the correction for a possible further extension higher. The larger picture is still seen rather negative as the pair continues to trend lower of its peak of beginning of June 2012. That is also a yearly high at 104.44 with series of lower tops and the recent failure to surpass the previous high at 102.48, seeing a risk of further slide lower. I would say the key supports are at around the 101 zone. That is the previous low of 5th of July, also 200 days moving average, and the loss of this level would be confirming the lower top at 102.30 and the 10 focus down towards 10067 low of 19th of July. On the upside, regain of 10230 and the trend line resistance at 10270 would be more supportive, and as the pair needs to clear the initial barrier at 10248 in order to possibly signal a stronger recovery and confirm bottom at 10067. Still more negative tone despite some movements higher. Still sees the situation on the daily chart fragile and more focus seen towards the downside. Back to the hourly one, also the negative tone that came now from the latest move, despite the indicator still being in the positive territory. Sees potential for a possible further extension lower, but as said, ideally reversal above 10150 would be just seen as an end of the corrective pullback and the resumption of the near-term rally from 10064. But of course, we have to keep an eye on the previous high at 10248 and the trend line resistance at 10269. Any failure to clear these levels would be again quite a bearish signal, and look for extension of the larger downtrend from 10444 with the key supports set at 10100 low of 5th of July and 200 days moving average. Any further question? Okay, no questions for today. I would like then to thank you all for being with us. We are back again tomorrow morning at our usual time at 700 GMT. Until then, I wish you all a nice day and very successful trading, and expecting to see you again with us tomorrow morning. Good luck.